What's up guys? In this video, I wanted to give you a portfolio update and share a few tips and tricks that have helped me, as well as talk about my plan for the rest of 2025. If you're new here, my name is Richard. This channel is mainly about generating passive income from your crypto as well as investing. And just a quick disclaimer, none of this is financial advice. Please do your own research before making any investment decisions. So if we look at my portfolio here, my portfolio is sitting at a nice profit in Ethereum terms, even against holding these tokens separately, up roughly $14,000. And the US dollar is also up as well. I don't look at this as much because I'm pairing a lot of these altcoins with Ethereum, and I started my investment with Ethereum, so the US dollar profit and loss doesn't matter as much, especially because sometimes it's not accurate, right? Let's say I deposit into one of these pools with 5 Ethereum, and Ethereum is at $4,000. But even if I made some Ethereum profit, but Ethereum is now trading at $2,000, for example, it would show a US dollar loss, right? My goal in a lot of these pools is to stack more and more Ethereum as well as some of these other altcoins here. And my other wallet stays the same here with 8.6 ETH of profit. So sitting on roughly 15 to 16 ETH of profit right now. But this leverage yield farming wallet is struggling a little bit here, down a little bit against holding, but it's not a big deal. I should be able to turn these around in a few months. The biggest loss comes from this position, the Anime and ETH token. I didn't expect it to drop this hard, but it's not a big deal if I still believe in the project, and hopefully these recover as more people buy more altcoins. So doing pretty good with the yield farming portfolio. If we look at my total portfolio, it's still doing quite well. You can see it's largely flat in Ethereum terms, 0.04% here, slight increase, down a little bit in Bitcoin terms and US dollar terms, and then Solana value is slightly up. So that's not bad, especially because some other positions have been underperforming a bit here. And one I want to highlight and share is one of the main strategies that I've been doing is using these altcoin gains to dollar cost average Bitcoin. Because if you look at my portfolio here, you can see my portfolio is pretty altcoin heavy. We have Ethereum NFTs, Pixel, Bonk, AIXBT, a leverage Ethereum yield farming position. So I do want to balance out my portfolio a little bit. You can see my allocation jumped up from roughly 2.5% of my portfolio for Bitcoin to roughly 3.63% Bitcoin here. And there's like a 33% increase in my Bitcoin holding. So pretty nice here. And I like to also keep like a dollar cost average chart. For June, I've added roughly $1,583 worth of Bitcoin. So roughly 0.0147 Bitcoin here. And if I just keep doing this over time, it would eventually allow me to accumulate at least 1 Bitcoin, right? My goal is to get to 1 Bitcoin. It doesn't matter how long I would take as long as I get there, because the price would fluctuate all the time, right? If Bitcoin, for example, pushes up to $200,000, then it would take me a little bit longer to accumulate that 1 Bitcoin. But one of my longer term strategy is to buy and hold Bitcoin for at least the next 10 to 30 years. And here's the dashboard view here. You can see in Ethereum terms, it's been flat, but still higher than what it was in January. Bitcoin terms, slightly down because a lot of altcoins have been pulling back a little bit. When I updated the portfolio, up in Solana terms and slightly down in US dollar terms. So I'm still mostly in Ethereum pools, but ideally over time, I want to see like an increase in Bitcoin portfolio terms. So my previous strategy was to stack more and more Ethereum. I'm still stacking a little bit of Ethereum here, but I'm starting to pivot into more Bitcoin and more US dollar exposure, depending on how Ethereum's price does. For example, if Ethereum shoots up to $3,000, I'm going to start yield farming more crypto to stable pools, as well as take some profit on my Ethereum into stable coins every month so that I can take some risk off the table. And depending on how you guys structure your portfolio, for example, my portfolio is pretty altcoin heavy. That's why I don't hold a ton of smaller cap altcoins on the side, because I already have exposure to them through the liquidity pool. What I want to do instead, if I have that strategy, is to use those fees to de-risk into Ethereum, Bitcoin, stable coins, and use a portion of the fees to compound into those pools as well, especially when the prices are cheap so that I could grow my yield farming portfolio. In terms of US dollar amount in fees, June has been a pretty low volume month here. So roughly $2,800 in fees, kind of the same with March, but you can see if we get one of the higher volume months here, the fees could jump up to $4,000 to $5,000 here. So that's the overall portfolio. And if we drop down to the position level, you can see these Pixel and ETH pools are still doing well, averaging roughly 30 to 50% APR between these pools. These positions are pretty heavy because my cost basis for Pixel is pretty low. It's my conviction play, and Pixel is a smaller cap gaming token. I've been a part of the community and known the team for a while, so I do believe that these prices would shoot up over time. That's why I have a heavier position here. But even if it doesn't do well, it's not a big deal because I have other positions as well. One position that have been doing well for the last few days here, I didn't add this to the portfolio update because I did that about like a week ago. And if we expand here, you can see I suffered a positive divergence loss. So I call this a positive impermanent loss or divergence loss because I'm earning Ethereum in the process, right? What basically this shows is that the prices are trading above my entry. So whatever bonk I put in the pool, you can see here 520,000 something bonk was slowly being converted into Ethereum here at a higher price than my entry. That's why I've been able to gain more and more Ethereum here in this pool. If we expand to the log here, you can see I started this pool with roughly 5.36 ETH here, and now this whole pool is worth roughly 6.58 Ethereum. And as long as the price stays above my entry, I would be able to preserve my original LP value while earning some really nice fees here, right? In this case, in Ethereum terms, is 64%. Against the current capital, it's roughly 50%. So quite good here, especially when the liquidity concentration is low. You can see this fee really spikes up here, $156 yesterday because the price moved past these like tighter range liquidity. And you can see they're chasing the range a little bit here, but I'm just staying patient. And as long as the price is volatile, I'm going to make a lot of fees, just like back here. So for last month, the price has been like pretty flat here. That's why sometimes you guys will also see like lower APR months is when the prices are flat in the pairs that you're providing liquidity for. And a lot of these tight range LPs kind of position around that. So then your APR would drop a little bit, right? But when the prices are volatile, especially with higher volume, then as a wide range strategy, we're printing fees when that happens. So Bonk is probably one of the best Solana ecosystem exposure in my opinion. It's a meme coin, but they also have like a lot of other products like the Bonk token trading bot, where you can trade Solana meme coins directly through Telegram, as well as a token launchpad kind of like Pump.fund that has been taking off recently. That's why we see a ton of gains here. And Morgan ETH is a pretty solid meme coin on Ethereum. It has a strong community, and I got in at a good price here. You can see based on the current asset, the APR is 64%. So quite good here. And it's only a small portion of my portfolio. AIXBT slightly down. This is just an exposure to the virtuals ecosystem, the AI agent ecosystem. It's not a big deal. I'm probably not going to add too much into this position here. I'm fine with the A2 Ethereum exposure. So it hasn't been doing too hot, but it's still pulling a roughly 54% APR on its holding value. So as long as the value doesn't decline too sharply here, I should be able to pull a profit from this position. And this basis for everyone position is still sitting at a loss here, roughly 1 something Ethereum loss. If we pop back to the other wallet, you can see in my closed position, I was in a full range LP. And then what I did was I wanted to limit my exposure to the downside. So then I split the liquidity and then just did a one-sided pool. I had to rebalance down a little bit here. That's why you see these losses, but I didn't realize a lot of these losses because I still have exposure to this LP, right? But my total loss for this LP is sitting at roughly 1.3 ETH here. is not a big deal because this position still generates like 200 something percent APR. And hopefully over time, this turns around as well. So one quick tip I want to share with you guys is you want to have a diversified yield farming portfolio, right? If you guys look at my position here, Pixel is in profit. This is actually a rebalanced position. Even though it's negative right here, it's actually net profitable for these two positions. Bonk is in profit, Mog is in profit, but these two position is in a loss, right? So Pixel, if we count it as one position, and with Bonk and Mog, that's a total of 3 positions, right? And then these 2 other positions are in a loss. So that kind of balances out. That's why I have a positive profit and loss right now. But if you guys went all in into one LP, for example, this AIXBT to ETH token here, then you could easily suffer a ton of losses when you're yield farming, right? For me personally, I like to be in at least 5 to 10 different pools using a wide range so that I don't have to spend a lot of time managing these positions. To manage 10 positions, it only takes me roughly 1 to 2 hours per month, which is nothing at all, right? We waste our time watching TV like at least a few hours a week, so 1 to 2 hours per month is not a big deal at all, especially because I'm updating the trackers and stuff like that. If I'm just harvesting my fees, it would probably take less than 15 minutes. And here with the yield farming portfolio here, if we look at the profit and loss, these positions are newer, so the profit and loss is not that reliable here. But you can see even if I'm in profit with these 3 pools, there's always a chance that I'm going to be in a loss with one pool, right? That's why we diversify our investments. If you guys pick only 1 to 2 tokens to yield farm, a lot of times the chances of you losing money goes up much higher because you're basically throwing like only 2 darts at the board, right? Versus you had like 10 chances, then the chances of like, actually scoring and making a profit is much higher. That's why I prefer like a more diversified approach and a wider range strategy, because if I were to manage like 10 positions with really tight ranges and try to squeeze like the APR, sometimes it would work, but I'm also taking a ton of risks if I do that. And it would become more of like a full-time job then, right? Because I have to basically calculate a bunch of stuff. Like for example, when I rebalance, I like to calculate how much impermanent loss I'm locking in. So it's really not worth it unless I'm managing like a 7 or 8 figure portfolio or something like that. And if we look at my leverage yield farming portfolio pretty quickly here, you can see some of these are meme coins, like Toshi is a OG meme coin that's on base. Pepe is the largest meme coin on Ethereum. So these 2 should do pretty well when the risk flips back on. Kaito is an InfoFi platform. But the main idea here is I just basically LP the assets that I believe would outperform Ethereum in the next 6 to 12 months. But even if it doesn't, these are assets that I believe would stay around for a while or go up over time. That's why I'm yield farming it. If I just want to capture a price action that's like less than a month old, then it's much easier to just trade the token because your downside is limited. You could set like really easy stop losses, capture the swing upwards, take your profits, and de-risk. Versus when we're yield farming, a lot of times we're staying in the pool for quite a while. So we really want to make sure the asset that we are LPing are assets that we would be willing to hold or accumulate. Because when we make fees here, we're actually making these fees, right? Like in this Pepe and ETH pool, I'm actually making Pepe token and this ETH here. So that's really important to understand. Even if I suffer a loss in the short term here, I've been in range for only 28 days, but over the 6 to 12 months, I could potentially turn this position into a profit, right? And in terms of exited position, I closed out of Arrow and ETH. I took some profits. You can see I closed my position above my entry here. If I pull up the Arrow chart, I want to make sure the quote asset is Ethereum here. So I actually entered back here at like 0.00034. If we look at the log here, you can see I entered back in February 4th. So roughly here on this candle here, and you can see I had to sit in a loss for quite a long time, right? More than half of the time, the prices were trading below my entry and the APR of this pool wasn't that high. So then it wasn't really enough to cover like the divergence loss either. There was an opportunity to exit for a profit there. I didn't really take it. And then when it came back the second time around, I took it and then used the LP for something else. So nothing crazy, zero point 0.5 ETH worth of gains. And I didn't really have a great entry. That's why I exited. And I used that Ethereum as a collateral for my leverage yield farming. And one thing I've found over time is that trendline support is not that strong, especially for like lower cap altcoins here. If we drop back to the daily chart and kind of draw like a rough trend line here, you can see the price would bounce a few times and then it eventually breaks, right? So really your best entry typically comes from like a horizontal line of support. So to do that, what I want to do is basically draw a horizontal line, right? For this, I want to make sure that the prices touch the line, or you could use a box as well to draw it into a zone and make sure that that's the level where the price are kind of bouncing at. So I could draw here at 0.00022 or slightly lower here at 0.0002. In this case, it didn't bounce, but when it's near here, that's a really good entry into arrow in my opinion. So if we could get a really good entry, then you could see most of the time the prices do trade above that entry and you would have had a positive divergence loss, right? So that's the ideal scenario. And that's what I have for this Bonk and ETH pool as well. If we look at my Bonk and ETH entry, I entered at this green line here. You could see more than like 90% of the time, Bonk was trading above that entry. So I'm really happy with that. And I could basically just collect my fees and sit in a profit like 90% of the time, right? So just a quick tip on the entry here. And then the exit would just work in reverse. If I wanted to exit, I could exit in this zone of resistance here. And before I hop off, I just want to go over my market outlook and kind of my plan for the rest of the year. In my opinion, gold is probably going to move sideways or come down a little bit here. Gold is more of an inflation hedge and like a risk hedge. When the market is really risk off, gold would move up. And what I also like to look at is the smaller cap stocks here. You could use the IWM ticker for the ETF, or you could look at RUT. It's a Russell 2000 index that's made up of US smaller stock companies. And then if this breaks higher, especially above its all-time high here, we can see that the market is much more risk on because smaller cap stocks are inherently more risky compared to something like the S&P 500. If we look at the S&P 500, it actually broke above its recent high. Smaller caps are still lagging behind a little bit here. So if we do see it break above the high here, we could most likely see crypto also trading at a higher price than now. And I do believe it would test its all-time high eventually. That's why I'm still sitting in mostly crypto to crypto pools. I don't mind accumulating more crypto and hold through a little bit of drawdown if that happens. And when the prices move to the upside, I could start securing more of my profits. So those are the really important charts to look at as well. And I do expect that the Feds would cut rates eventually. If not by the end of the year, then next year. That would also put more liquidity into the market, and some of it would flow into these risk-on assets as well, especially stuff like Ethereum or smaller cap altcoins. So I would probably pool something like this depending on what the market does. I'm still sitting in crypto to crypto pools. I might shift some of it to crypto to stable pools just to decrease the volatility of my portfolio and to take some profits on my positions, especially if Ethereum is trading above $3,000. And as Ethereum breaks its all-time high at $5,000, for example, then I would probably shift more into stablecoin strategies, depending on how the market outlook looks at that time. But as prices move up, I want to basically take less and less risk and de-risk my portfolio. And if prices are low again, then I'm basically more comfortable to take risk once again. So my liquid portfolio right now is at 147K. The all-time high is around 180, so roughly 20% away from its all-time high. Not too bad. Hopefully we reach that in the next couple of months. And this is really great because Ethereum is still trading below 2600, right? When I hit my portfolio all-time high, Ethereum was trading at like $4,000. And a lot of my larger holdings like Pixel was trading at 10 cents. So like a 3x from its current price. So it's really nice to see like my portfolio is actually doing really well, very close to its all-time high. And again, most of the gains come from yield farming. That's why I'm so passionate about it and want to share as much as I can in this channel. So if you guys do want to learn more about yield farming, how you can start generating more passive income with your crypto portfolio, especially if you guys are here for the long term, right? You're not just trying to chase the next 10 to 20x. We're here for the next 5 to 10 years at least. Then be sure to check out some of these other videos here. It would really help your yield farming journey, hopefully help you make more gains as well as protect you from your losses. Thank you once again for watching. I'll catch you guys next time.